Okay, friends, let's start with this topic, which is Introduction to International Banking. Now, you see, let me tell you, there are approximately 200 countries on your planet. Do you know or have any understanding on how these 200 countries are coordinating with each other when it comes to banking? Is there any common rules? Or like if you have different rules, different country, like some countries are developed, some countries are underdeveloping, some countries are least developed nations. So the state of banking is different in different countries. Now you see, can we have some common rules for everyone, or it has to be same for everyone? And it means what I'm saying is, can we survive with different set of rules? Like every country, you travel to different countries, every time you land up in a country you have to follow the local norms, but when you switch from this country to some other country, you have to again recreate the documents in a different manner. You see, it will be very very complex. So can we have something which is very common, is same for everyone? That is what is standardization. So when it comes to international banking, standardization is very very important. So if you create certain documents, it may be a loan document or it can be a facility related document. Now you see, terms and conditions need to be globally adhered. Yani all important components should be there in your documentation so that nothing is left out. There is no, they don't want to have any scope of any error. Okay. Now the world of international banking encompasses the complex web of financial institutions, regulatory frameworks, and cross-border transaction that power the global economy. You see, need to understand. Right now, BRICS, Brazil, Russia is into a war, so exclude Russia. India, China, they are actually the emerging economies. South Africa is the fifth country. So these are the fastest developing nations. So they are bringing in the growth rate, GDP growth rate. Whereas other developed nations, they are very much close to stagnation. Means their growth is now no more happening, is no more a buzzword, and hence they are relying on these BRICS nation to do something special for everyone on this planet. It's only possible when you do have a full-fledged interconnected banking system. Okay, so currency is a very important mode of exchange, and country to country you do have different currencies. So conversion of currency from one currency to another country's currency is very important. So you see, this leads you to another phenomena which is called as global financial landscape. How is your global phenomena currently happening? Now you know, day before yesterday or yesterday only, Iran's president died in a plane crash. Earlier to it, Israel and Palestine, there is a war going on between Israel and Hamas. Before it, it was Ukraine, Russia. Before it, it was Armenia and Azerbaijan, two countries fighting their war. Before it, it was China being very aggressive against Taiwan, and also India taking those border issues. Now you see, this is your global phenomena. You see stress everywhere. You see tension everywhere. You must have heard some news regarding, like you see, when it was a Russia and Ukraine war going on, USA and other developed nations, European nations, they have blocked or they have tried to put in lots of financial restrictions on Russian banks, blocking their transactions. SWIFT may not be accessible to Russian banks. SWIFT is a like fund transfer facility, or is a platform, or is a exchange medium which is used by almost every country. Now Russia was also a member to it, so they were also using it very frequently. But because now there is a economic sanction, so you see they cannot use it. So just imagine the state of Russia. So if you we cannot fight with you physically, we can block you financially. So again, it is a type of pressure which is being created on Russia. So now you see, it is very important. International banks, because you see stock exchange where you're dealing in foreign currency, and all your international transactions where you bring in import or you do some exports. So it may be an outflow or an inflow. You see, this all requires different currencies and a system which is foolproof, well connected system. So if you have a time gap or a delay, you see, you may have a heavy loss due to the same. So it's important, you need to take everything into account while you are trying to give them these services. Now let's go into regulatory framework. Country to country, rules regulations are different. Now you see, for India it is RBA. For London it is Bank of London. For United States it is Federal Reserve. So you see, the more you go across different countries, you have to follow all the regulatory rules and regulations created by those like apex bodies. So you don't have much of choice. You have to create your financial reporting according to their instructions. Consistency should be there. Periodicity of submitting these reports is again very important. You cannot breach it. If you breach it, then there will be monetary fine. So avoid any fines and do business as per the local norms. And then followed by national regulators. So you see, when I say global, so means there must be some agency at the top who is coordinating with all the countries together. So in banking sector, you do have this committee called as Basel Committee. Basel Committee is mentioned in the third line on banking supervision. BCBS is the name of the committee who is taking care for risk management practices across the globe. Different banks who are member to it, they have to follow the norms created by BCBS. Uh, and then local regulators, and you have to look for the various compliance requirement. Uh, let's proceed further. Now you see cross-border transactions. What are the major area of operations? You have to have international payments. You have to have currency exchange, and then you see compliance oversights are very important. You see hawala transactions. You must have heard any your money is used for some anti national activities. So to ensure that there is no unlawful activities are involved, hence compliance is very important. Documentation is very important. Rule regulations are very important. So money laundering is a word which is very common nowadays. Means people are using various means to generate black money. And you see black money means simply the currency that you use on day-to-day basis, but you don't pay tax, you don't give share to government, then it is called as money laundering. Okay, the money is black in nature, means you don't pay tax, it is black money. And you see any institution who is helping you in managing black money is unlawful. Okay, so we have anti money laundering rules. Again, these are given by regulators to ensure that market, which is actually a game, should be played fairly by all the partners. Okay, so international payment involves many countries, so foreign exchange is required, physical currency, digital payments, checks, all these modes of payment have to have some sort of commonalities, some rules and regulations, so as to ensure that these transactions are done error free and very smoothly. Now, next term which is coming in our today's discussion is correspondent banking. Now, you see, correspondent banking is very critical component of global financial system. You see, this type of banking and allows you to have cross-border transaction. Now, you see, let me give you a very easy example of the same. Uh, let's say India would like to, one of our businessmen in India who is residing in India is trying to do a transaction with another second businessman who is based in Nigeria. Okay, Indian businessman has his account in SBI. SBI don't have a branch in Nigeria. Now you see, if you go to Nigerian person, he is saying they do have a bank called as ABC Bank Limited. Now you see, ABC Bank don't have a branch in India. SBI don't have a branch there. Now how are you going to do a transaction with them? So what we are going to do is, like, we are going to bring in an intermediary. We are going to bring in a facilitator. So this facilitator will help us to settle the transaction in local currency in a timely manner. So there will not be any gap. There will not be any delay. So this type of business model will help bank to save the cost, because to open a new branch in that area to complete this transaction is going to be very, very costly. So you see, there is no problem if you open a branch in an area where you have good number of transactions. So there your sustainability will be there. But if you open a branch in a rural area where clients are not there, let's say you open a branch in Siachen Glacier, you don't get clients. How will you manage the operational cost of your branch? That is what is your rationale. So open your branch only when it is required. If you don't have much of business to happen, then what you do is, like, you engage yourself with correspondent banking. Bring in your facilitator. They may be from the same country or they may be someone else, like HSBC, Bank of America, American Express. They have very strong networking all across. So if you don't have a branch of yours, you can ask them to act as your representative, and you see, you can get the transaction done. Now you see trade finance. Trade is very important aspect when it comes to international banking. Now you see trade means either you're buying it or you're selling it to someone outside India. So now you see, this will bring in foreign currency, this will bring in foreign documents like letter of credit, checks. So you see, when you have this, you see, your businessman again needs funding for packaging or for producing the goods or for marketing and branding in international market. You see, all these things will require a strong bank to support these business house. So hence, you see, it may be global trade or some trade related risk factors or liquidity related to trade is in discussion. So we have to have a banking system in place. Liquidity means your funding requirement. Maybe you have sent your goods to a counterparty which is based in a foreign country. Funding will be coming in next few days, but till that time, if you need money, you have to be supported by your banker. Okay. Now you see, if you look into foreign exchange market, you'll find $6.6 trillion is what is their daily trading volume. This is how much you do a trade in a single day. 6.6 trillion US dollars. Now you see, if you see the proportion of transactions where like you see transaction requires immediate settlement, approximately 60% of your all transactions is spot transactions. Now you see, this is there in forex market. Any on the everyday basis, you have to settle your transaction. You cannot wait for long. Okay, so if it is a profit or a loss, you have to settle it on the same day. So 60% of your transactions are on spot transactions. Now you see, next is wealth management services. So when you go abroad, you open a branch, you need to be a bit personalized. You have to give personalized services to your clients. You have to have comprehensive solution for whatever problem you are giving it to your client, and you should have a global reach. Because when you're trading, when you're dealing with clients who do have global presence, means they would like to have their trading partner who is present everywhere, omnipresent. Yani if you need to send some money to North Korea, South Korea, Brazil, China, or some other country, you need not to bother. Why? Because your bank is there everywhere, or they'll be making certain arrangements for your funds to be getting transferred. Okay. Now you see, digital transformation is very, very important. Omni-channel banking. Now you see, it is not only through branch but also through mobile phone, website, through kiosk, through frictionless transactions. You see, you're making it omni-channel. Customer can get it done 24 into 7. Anytime throughout the year, you can go to a branch and get it done. All your transactions can be done. Next is intelligent automation. Now you see, we are converting the manual processes into automated processes. Okay, so for this automation, what is happening is, like you see, you automation can be there for all the day-to-day operations of a bank. Maybe clearing where checks are involved, cash where cash collection or remittance is there, or issuance of a checkbook, or creating an FD. Self customers can simply walk in into a branch, or they can use a device, can log in into their account and can do all these transactions of their own. So this is what is called as intelligent automation, which is actually helping banks to cut down their costs, which is HR cost, and will help banks to increase their profit. Okay, how they can increase their profit is like they can customize their data set well, and it can be given to various fintech companies, where fintech companies can use that data and can bring in certain product offerings which are very, very relevant as per customers perspective. Okay, let's go for the emerging technology. You need to bring in every technology, like I'm going to name some of them. Blockchain, which is a very secured mechanism of transaction. Then you are going into cryptocurrency, and you see, all these things have certain degree of risk involved in it. So risk mitigation is very, very important. Future trends and innovations which are going to happen is like digital banking is going to dominate, open banking system is going to dominate, cryptocurrencies has already influenced the youngsters like anything, and then finally embedded finance, where you see, you avail all your banking services on various digital platforms, and you need not to pay much for it. So customer is able to take all their decisions of their own without the intervention of any branch staff. Okay, it eliminates the element of mis-selling. So with this, let me end this class now. Good day, see you tomorrow.